But we'll wait just a second for some people to get on, for Facebook to find me an audience, and we will do some Q&A. Hopefully everyone is having a fabulous weekend. It's a pretty good weekend. I mean, minus the crazy amount of rain that we got today, but hey, who's going to complain about rain? Rain's a good thing where I come from, right? Mr. Bricker, looks like you are on. How's everybody's weekend been? Mr. Stecker, thank you for joining. What's up, Anthony? All right, we are slowly getting people on. All right, so let's go ahead and get started. Since, got Sunday Night Football coming on in 30 minutes. Brittany, my weekend was fabulous. How was yours? Hello, Mom and Dad. You can always count on your guys' support. Appreciate it. So tonight I'm strictly going to do a Q&A session over our last four, Facebook live feeds episodes we've done. So far we've talked about saving. We've talked about debt consolidation. We've talked about home insurance, and we've talked about life insurance basics. So tonight, I literally just want to talk about just Q&A, answer any questions you may have, recap everything we've talked about. Of course, not go in detail. There's not enough time for that. But if any questions have come about anything, I get a lot of instant messages on Facebook that I answer all the time. So feel free to answer away. So the first Facebook live feed we did was about saving. And that whole conversation was basically about creating a budget. I know, Brittany, slowly building, but it's I think it would help if I put my wife on Sunday Smarts. There tends to be a few more viewers when she's with me. So, but saving, we've got budgets. So that's if no one knows how to create a budget, super easy. You take your income, you take your fixed expenses, and you take your variable expenses. And then what you do is you take your income minus your total amount of expenses, and that's how much money you have at the end of the month left. So what I encourage people is, if there's not enough money left at the end of the month to be saving, you need to take some variable expenses away. So maybe cable, possibly internet. Don't go out to eat 3 or 4 times a month. So it's figuring out how you can save more money by taking some of the variable expenses away. And you need to be creating emergency funds. You need to be saving for emergency funds, just in case you lose your job, become disabled, whatever. And then you also need to start investing. Investing in your future is big. It's a topic I haven't discussed yet, but the sooner you can start investing and putting money away, the more money you'll have when you're 50 and 60 in retirement. They say that the money you save in your 20s is the money that you retire on. You are absolutely correct, Brittany. Absolutely. So that was the first topic, saving. Second topic we discussed, we talked about debt consolidation. Debt consolidation is a magical thing if you work it to your advantage. So the idea behind debt consolidation is taking a high percentage rate. So let's say you have a credit card. Let's say you have $2,000 in credit card debt, and you're paying a 19% interest rate on that credit card. Well, why not try to find a credit card company that you can roll that into that has 0% for the first 12 years? Or maybe you have a car paid off, or you have equity in a car. Why not do a cash out refinance on your car at a 3% interest rate and pay off the 19% interest rate credit card? That's the whole idea behind debt consolidation. It's taking higher percentage interest rate debt and moving it or consolidating it down to lower percentage interest rate debt. Taking bad debt, moving into good debt. Then the following week, we did homeowners insurance. So homeowners insurance, we talked about what dwelling coverage meant, what detached structure coverage meant, liability, earthquake coverage, backup of sewer and drain, deductibles, all that good stuff that no one... insurance is kind of boring, quite frankly. Most people get bored when talking about auto and homeowners insurance, but the liability limits are very important. The type of policy you have, making sure you have a 100% replacement cost policy, making sure you have an all-peril policy. Two very, very important things. So that was kind of what we covered with the home insurance. And then last week we covered just life insurance basics. Very, very high-level view basics, term, permanent, what to look for in a company that you're dealing with. So those are the 4 episodes that we've had so far. I've got a lot of positive feedback and a lot of questions throughout the last couple weeks. So that's why I wanted to do a Q&A session. And it doesn't have to be about these topics. It can be about anything. And so do you guys have any questions at all? I'd really like tonight to be very interactive if possible. If not, we'll keep it short, sweet, wrap this bad boy up, and get ready for some Sunday night football. So anybody at all. Why did you get into insurance? Well, that's a great question, Courtney. I got into so my background, I was going to school for pre-law. I was getting a business degree with a sociology second degree, basically. So I was going to be a double major. Stumbled across a State Farm agent, shared with me what they did, what their main job was. So long story short, the reason I got into insurance and financial services is to help people. The insurance business, I actually like the financial services business better. So helping families out with protecting themselves and saving for the future. So you're talking life insurance, you're talking investments, so retirement planning. I actually specialize in distribution planning for retirement. So that's actually helping people all the money that they've saved, making sure they don't run out during retirement. That's actually what I specialize in and what I've got my continued education in since college. But to help people, that's why I got into insurance. It's a great question. That's why myself and Courtney, that's why we chose Pleasant Hill. We wanted to be in a town, a small town atmosphere where we could get to know people, take care of them, help them out. We love Pleasant Hill. Chris, what is the likelihood of an earthquake hitting here? Okay. I would say the likelihood of an earthquake hitting. I mean, I don't know. I don't study tremors. I don't study anything with earthquakes. So my job as your insurance agent is a risk mitigator. So my job is to make sure that we mitigate the risk, and that is by having earthquake insurance for $50 to $100 a year to protect a $200,000+ asset or $150,000+ asset. So I don't know what the likelihood is, Chris, but I personally like earthquake insurance, at least in our area, because it's so cost effective. I mean, $50 to protect a $100,000+ asset. They say if the New Madrid Fault ever goes off, that we will definitely feel it up here in Kansas City. We just recently felt tremors from Oklahoma earthquakes. So I definitely encourage having earthquake coverage because it's so inexpensive and it protects one of the larger assets in most families' households. Great question. It's a really good question, actually. Do you foresee any major changes in the insurance and banking business from the consumer standpoint after the upcoming presidential election? That's actually a great question, Mr. Stecker. So the banking industry is always changing. It's been changing for the last 10 years or so with very compliant laws that we have to abide by, which is good. Sometimes it can be a little, I don't know, it's good. The thing that's actually interesting is there's a ruling coming out. It's called the Department of Labor Fiduciary Ruling that will actually affect middle-class investors quite a bit. So you're going to want to take advantage of your company 401k plans because starting next April, more than likely, all investment advisors will have to be fee-based advisors. So what I mean by fee-based, and statistically what research shows is you shouldn't have a fee-based advisor unless you have $2 million in assets or more. What the new ruling basically says is that if you have investments outside of like your employer-sponsored plan, all advisors have to charge you a fee. At least that's what I've been told. I don't know the ins and outs yet. It'll take effect April of 2017. So keep your eyes open for that. See what the ins and outs are. But that's so if Mr. Trump wins, maybe that rule doesn't go into effect, because that was definitely an Obama push. But if either way, who knows? Elections always stir stuff up. Great question. Any other questions? I've had two. Those are two really good questions for sure. Christy, I'll check on that this week for you. Anything else? So any questions at all around savings, debt consolidation, homeowners insurance, life insurance, anything at all, any type of insurance in general? Okay, well, if there isn't going to be any more questions, and my lovely wife just got home, and she's watching the live feed.
Live on live.
So, if there's no more questions, I won't take up your all's time then, and we'll wrap this bad boy up. I think next Sunday, I don't know what I'm gonna talk about yet. So, and we actually may have plans. So next weekend, Sunday Smarts may actually get canceled. Stay tuned. We'll definitely let you know. Either way, thank you all for watching. Thank you for joining. Thank you for your questions. I always appreciate all of your guys' help and support. I know, it's crazy, Brittany. Thank you. Thank you, Anthony. Thank you, Chris. Have a great night as well. Hopefully all of you have a fabulous week. It's supposed to be beautiful. I think highs are in the 70s. And so other than that, have a fabulous rest of the Sunday evening. A great week. Make it great. Remember, it's up to you. When something gets you down, don't let it get you down. It's completely up to you. Thank you all again. See ya.